Good evening and welcome to the Australian Stock Market Show. Tonight's show is super exciting as it's all about deciding whether 5 of the best ASX stocks will outperform cryptos. So, is now the time to buy? Stick around and we'll give you the answer. As usual, we also have loads of stocks and interesting tips for your trading. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham. How are you?
Oh, fantastic.
That's great to hear.
I think it's funny. You've got a cold and I've got a busted wing.
I know you do, and a few ribs sore. Anyone would think you'd been in a bit of a blue.
Well, I don't know. Maybe not. I'm not going to get into a blue with you tonight, that's for sure.
Yeah, that's right. I might just poke you and then you'll be in pain.
Yeah, no, don't worry about that anyway. But I think we better get on with the show, Janine. Otherwise,
all right,
I will get in a blue with you.
Okay then. Now my quote for tonight comes from Warren Buffett. Stay away from it. It's a mirage, basically, in terms of cryptocurrencies generally. I can say almost with certainty that they will come to a bad ending. And isn't that funny?
When did he say that?
I'm not sure when that quote was, but I'd say it was before the crash.
Which one?
Yeah, the biggest one, the 75% correction I'm talking about.
Well, it had a couple of crashes, crypto, so from that point of view, but he's not necessarily wrong. I mean, crypto is going to be quite volatile at all times, isn't it? And being largely unregulated, that's probably why he was talking about that.
I'd say you're right there.
I don't disagree with him on that.
And could it be right again and a good investment?
Sorry?
Could it be good to put money into again? That's the big question, isn't it?
Well, according to Buffett, it's never a good time to put money into it.
That's right.
So is it a good investment? That's the other question.
Well, investment, or is it a more speculative type of thing that you trade?
Well, I think you got to put that in the speculation basket, any sort of crypto, because of the lack of regulation and that sort of stuff in there as well. So that's probably what Buffett's talking about. It's not really an investment. And I think, back 10 years ago when they were talking about Bitcoin and all the ideas and thoughts and what they thought it was going to be by now, a lot of them haven't really rung true. I
know, but if something's traded and there's a price for it and it's on a listed exchange, that we're actually able to trade something. I mean, I'm sure he invested in small companies that were, at the time, more speculative.
Yeah, but if you're talking about the difference between buying a stock, which is an asset, and a crypto, it's a completely different thing.
It is a different thing, but hey, we've got to walk into the new world, don't we?
Sorry?
We've got to walk into the new world at some stage.
I think we're sprinting at the moment.
Okay. If you're watching tonight's show on YouTube, hit the subscribe button now and get ready as Dale has a very special opportunity for you. If you've got questions, then it is your time to call into the show on 03 9290 9988. That's 03 9290 9988. If you prefer to text, then you can pick up your phone and send your question to the number on your screen. But we generally give priority to those who call into the show.
All right, now to get things started, the first person to call into the show will get a free copy of my second book, Accelerate Your Wealth. So make sure you pick up your phone and dial us on 9290 9988 right now. Now, before we get into the first section of the show, if you are watching us on YouTube, then I have a very special offer for you. When we finish, if you do comment below this video and then email us an image of your post, then we will send you a private link in the first week of July to my analysis of the top 20 stocks in our market. Now, I'll cover what I believe they'll be doing in the coming year. You'll also need to be a subscriber to our YouTube channel. So here it is again. You need to post your comment below the video and then email an image of that to info@wealthwithin.com.au. Now, for talkingwealth.com subscribers, just relax, because you'll automatically get this as part of your subscription in my weekly stock market report that you're getting right now. It's time to call us on 92909988, and while we wait for you to call in, it is the second week in the month, and this means we take a look at sectors in the Australian market. So let's get into the charts, Janine.
Yes, let's do that. All right.
On your screen right now is all of the sectors in the S&P ASX 200.
Okay. Now, so
okay?
exciting. Yeah, I think I'm fine. Thank you for asking.
Okay, good. That's fine. Keep going then.
So far, so good. All right, so we can see there at the top of the screen, we've got the information technology sector. So we've seen obviously a burst in that sector this year, up nicely, 28.82% for the year. Communication services up 9%, which is good to see.
Yep.
Industrials 7.94%. Healthcare up 7%. Consumer discretionary up 6.76%. Interesting that consumer discretionary is actually up there and is ahead of staples right now. Given the current environment, you'd think it would be the opposite, wouldn't you?
Well, you'd think so, yeah.
So that's a telling story, I think. Then you've got utilities there up 5%, and then consumer staples up only 3%, so that's Coles and Woolies.
Yep.
Materials is up 1.86%. So all of these ones towards the bottom are the ones that we think that you ought to keep an eye on. So materials is obviously pretty flat this year.
It started to move this last month.
Yeah, because it was negative, wasn't it? Real estate, we've added, which is up 0.35%. Energy, actually down 3% at the moment, and financials down almost, minus 5.7% at the moment.
Yeah, you got to wait. I mean, if materials keep going up like it has been the last month, and then financials start to turn, our market will be very bullish. But it is interesting that energy is actually down. But I was chatting to a gentleman today who is the founder of a big publication. I've just gone blank on it. That's what happens when you get older.
That's right.
Big financial publication. I was chatting to him for talkingwealth.com, and he was saying, I was asking about the US market because he's US. And about obviously CPI continuing to go up, the US dollar, what's happening with all of that. And we're talking about their market, and he was saying consumer discretionary and consumer staples, he would think that in the second half of 2023 we're not going to be reporting very good reports towards the end of the year with what's happening with CPI over in the US at the moment.
Well, that's really probably not a great deal of surprise to anybody, really, is it?
Well, probably not, but he was suggesting that the S&P 500 is also going to slow down a lot because of it, because it's been pushed along by their information technology sector. So he was suggesting that as well, which would then augur for our information technology sector, which seems to follow the US one, even though none of those companies are on our exchange.
Yeah, amazing, isn't it?
It's just amazing that it takes off, and so people think, well, information technology in Australia is really good, but it doesn't necessarily correlate.
It's like I've been saying to you for ages, there's the fund managers who are the big movers, aren't they? They're the ones that are just copycatting what's going on in the US.
Yeah, but why? If there's not a value in the company here in Australia, why keep buying it? So it just doesn't make sense.
Well, we've seen stocks within sectors moving pretty much exactly the same over a period of weeks. And the chart looks so similar that it has to be, it's an AI-driven thing, isn't it?
Well, it's got to be driven by something, doesn't it? And it sort of belies logic to me, but anyway. So what else are we going to talk about?
So did you want to look at the RRG graph there and just have a look and see what's happening?
Why don't you look at it?
Look, you're the one who loves talking about it. So financials are actually heading into that lagging area right now, which is interesting.
Why don't you bring it up so everybody can see? You have this bad habit, don't you?
Oh, look, I can see it. Sorry about that.
That's because you're not the one that needs this. Well, you do need to see it, but looking at this is financials. This is the exciting thing. I was saying this on my market report, saying in the next few weeks when it gets into this could start to turn into finding opportunities in that financial sector and starting to buy, and I think that's looking really, really good because obviously there's consumer discretionary there, there's obviously consumer staples coming back, but right over here you've got utilities coming right down through here, but materials, there it is right there, it's outperforming at the moment. So it actually flipped, it was in this section here and it turned around and flipped straight back up again.
But yeah, that's really short term though, isn't it?
Which was really unusual, so hopefully it keeps going that way, and then financials start to move up, so that's what I'm thinking.
Okay, fantastic. That is it for our thoughts on the sectors in the Australian market. Now remember, if you want to participate in the show but you can't watch live, you can send us an email with your questions to info@wealthwithin.com.au. Please tell us if you watch on YouTube so you can ensure we answer you in the first part of the show. That said, if you like our show, then you can watch the extended version on talkingwealth.com shortly after we finish. If you're not sure whether to subscribe or not, then take up your 7-day free trial and you can watch tonight's show in full and loads of other content.
All right, Janine, now it's time we get into our first email question for tonight. So whilst we wait for everyone to call or even text us, let's get into it. Now we have an email. This one is from Emmeline, and she says, "Hi, Janine and Dale. I was watching your episode, Will Stocks Go Up in May? And Janine made a comment on Acro Formworks monthly chart, flatlining perhaps due to a backdoor listing. I understood what a backdoor listing is, but could you explain how it might affect stock prices? Really enjoy the value you put out there. Thanks, Emmeline. Do you want to answer that?
Look, I thought the best thing to do is to look at the chart and see the gaps. Now, often that's the telltale sign. When you see a big gap on a chart, particularly if it's a monthly chart, and then the stock looks like it flatlines along the bottom, it's generally a good indication. It's not always the case, but...
Yeah, but she's saying, how does it affect the stock price, having a backdoor listing? That's what she was asking.
Look, I don't think it has any real material impact on it.
No, because a backdoor listing really is just, they've just bought a company that's just sitting on the exchange not being quoted. So then the new company takes it over, changes the name quite often too, and then the price just goes rocketing up, but it doesn't.
Look, I mean, whether because we haven't done a lot of study on some of those smaller stocks, because generally it's those smaller stocks that we're talking about that have had the backdoor listing.
You know, they've just
I have to admit that I haven't actually done a lot of study on multiple stocks to see whether, because historical prices affect future, so it's really a question about whether that chart, whatever it was or whatever that stock was before this new listing came in and took over, whether that has a material impact on the price going forward. And what we're saying is that
well, the answer would be no.
No, but in actual fact, we always say you've got to look at the history of any chart.
But you can't, because if it's let's say ABC company has stopped its stock being quoted on exchange because the company's just crap. It's not even trading. It's not doing anything, right?
Yep.
So instead of taking it completely off the exchange, a new company comes in and buys completely 100% of it, doesn't do what the other company does at all, just folds the other company away, and then trades on.
I've seen arguments where people say, okay, there's been a company that's transformed. It's the same company. It's not a backdoor listing. That's not a backdoor listing, though. But it's transformed into a completely different business.
Still not a backdoor listing.
So whether it was a different business before that, it's not relevant. It's more about...
It's still not a backdoor listing.
Well, why would data providers leave the data on there? Why would Optima have that data on there in the first place?
Because it's still that ASX code that was there and the company there, so it can change its code and it can change its name.
Code, but
it's still, from their point of view, it's still one listing.
Look, I think... We can continue to argue
this one, aren't you?
Because a code is a code and data is data, isn't it?
Yeah.
So we could have an argument all night long.
No, and you're going to lose. It's fine.
Okay, that's great. All right, I'll concede that one. We've got a text, Dale, by the look of this, and this is actually broken up an argument, so thanks for doing that. And this is actually from Liam. Now, he's talking about Warren Buffett. Your quote tonight was from Warren Buffett. Do you have any more quotes from him that you strongly agree or disagree with? Thanks, Liam.
Good. Which one do you like?
I don't know. There's like thousands of quotes out there from him, and I wouldn't even know where to start.
Oh, look, there's one that's called "Price is what you pay, V is what you get." I love that one, and I think that's so apt because a lot of people look at what they're losing, not what they're getting, quite often. But they think, I want to trade small caps, mid caps, speculative stocks because they're only small prices, but they're not considering what they're getting for that. They're looking at the dollar value rather than the value. So that's what he's saying, price is what you pay, but value is actually what you get when you're pricing it. So they're not seeing what they get, they're just looking at the small price, thinking, ooh.
Look, I guess what we're saying, Liam, is that Warren Buffett has some great quotes. Yeah, absolutely. We have used a lot more on the show before, and we have actually agreed with them, but in this case, we beg to differ.
What did you argue? You don't agree with that one?
The cryptocurrency. No, the cryptocurrency one.
Oh, you don't agree with it?
No.
How do you know? How do you know I don't agree with him?
Jeez.
I don't necessarily
Isn't really the
disagree.
question whether I agree with Dale or not?
I don't necessarily disagree
matter about
with
what Warren Buffett says.
Yeah, good on you. Cool. All right, well, let's move on anyway. But if you do want to be like Lamb, please send us in a text or give us a call on 929-099-88. As we said, that we do prefer the calls, but give us a call 929-099-88 and do it now. Let's get into our next email, Janine, which is from Thusan. I think it's how you say that. It says, Dear Janine and Dale, firstly I want to give a big thanks for doing a really good job for investors. Recently I found your fabulous channel. I'm new to the market. I would really like to buy mid-cap stocks. I've been studying lithium stocks for about the last 6 months. If you can give a little opinion about GL1, PLL, LLL, and CXO. That would be appreciated. Regards, Thushan. We're not going to do all of those, mate. We might do one of those. We don't generally do multiple stocks for anybody. We just don't have the time to do that. I'm interested in why mid-caps. That's probably, he doesn't say why mid-caps. If he's a new to investing like he said he is, what would you suggest he be doing?
Sticking with the top 100 or top 50 at least anyway.
Yeah. Why not the mid-caps?
Look, mid-caps are more growth and more volatile stocks, so they're generally better trading stocks. So investors generally want to invest for longer term. They're not sort of in and out. Okay,
so you're saying as a new investor, mid-cap stocks are not where he should be looking at?
I think he should be up in the top 50 rather than in the 50
what about
to 100.
lithium? He's talking about lithium too.
Lithium, look, I mean, they're more volatile, so that's the question here with lithium. I mean, just have a look at one of the stocks. I've got it on the screen.
I know we did a show a little while ago on lithium, so maybe he should go back and watch that show anyway on lithium. When was that, about a month ago, 6 weeks ago?
Oh, he'd quickly be able to do a search on Wealth Within's YouTube channel on the live.
Okay, so you want to go and have a look at this stock, which is GL1, which is one of the stocks?
This is the first one that he's picked out of the lot.
Yeah.
So just as an example of the volatility, if you see that a stock has done this, so we've got 1, 2, 3, 4, 5, 6, what's that, 65% in 6 months. That's a pretty good indication of the volatility of the share. Now, obviously it means it could go up just as quickly or even faster on the way back up. Here you can see there's some sort of a move up and then a similar move down. But
quite volatile, isn't it?
It's taken a little bit longer to go down, but it just shows the volatility on the weekly chart, even if it stands out even more. I mean, this stock, if you take it in isolation and you're looking at this stock and thinking, well, what do I think of it? It looks quite nice.
Well, I mean, if he, let's say he bought it and just buy and hold as an investor, he bought it somewhere down there and he'd be sitting here, he'd be going, I'm up 500%, but then he's had this huge big roller coaster.
But that's a lot of ifs.
That's a lot of ifs. And so
you could have bought it at the top too.
Could have bought it up around there and then all of a sudden had a 62% fall, or you could have bought it up around here and then had a 65% fall, as you said. So,
I mean, I guess one thing that's a bit of education, if you're in a stock and you found it's fallen 60% and then it's risen, let's have a look at the rise. Let's say then it's risen 200% and then it's fallen another 60-odd%, then you know that this stock is not a buy and hold stock. That's all I'll say.
Yeah, but I'm just saying he's going to have to, if he wants to buy stocks like this, he'd be part of the whole big roller coaster up and down. And new investors just generally can't handle that sort of stuff. Because
not over that sort of time frame.
Not over that sort of time frame. So that's where Janine's advice is really, really sound. You really do need to learn how to be an investor. And that
great
really
trading stock though, if you want to trade it.
If you're a good trader, and you've got to work out how to get in and then get out of it again too. But as an investor, really it's about dripping into the market, as getting in good stocks and learning how the market works and how to buy and sell stocks without getting ones that are going to kill you either way. And so that's why Janine's suggesting that sort of top 20, top 50 stocks first. And then when you get more experience, then start moving it out from there. But don't start on the mid-cap. I think that's really what you're saying, isn't it?
Yep, that's wise.
All right, Janine, well, we haven't got a caller as of yet, so that is it for our emails for the first half of the show. We do have more in the second half, along with other opportunities to call in and text your question. Now it's time for our topic for tonight, which is all about whether now is the time to buy ASX stocks or cryptos. Now we'll be covering Bitcoin and our best pick of the ASX stocks. We'll give you our view on whether the risk justifies the potential returns. Now in case you've not been watching, you need to know that Bitcoin fell 75% and is recovering right now. But will the recovery last? Now, we will be comparing why the fall is important and what it indicates about the recovery. We'll get into many ASX stocks down from their highs, including BHP and Santo and some banks, to share what will perform best in 2023. And we will share the top 5 stocks that are likely to outperform cryptos this year.
You know, Dale, I'm so looking forward to this. It's going to be exciting.
Are you? I couldn't have guessed at all.
Really?
That you're excited about this. I know you're excited about when we talk about crypto.
Okay.
Yeah, because you love it when I talk about crypto, don't you?
When did you talk about crypto?
Not lately, but I know you do because you get me fired up like you did earlier on today. So you haven't, yeah. But anyway.
Okay.
All right, Janine, I've had a little bit of fun. So what's next?
Well, Dale, we have some interesting information from a couple of articles I read.
Yep.
We can talk about the titles and what investors can take away from that.
Okay. So what are we doing?
All right. Bitcoin interest at lowest ebb since 2020, according to Google Trends. So the interest in Bitcoin is the lowest since 2020.
Yep. So it should be.
Right, which doesn't that, what does that tell you right now?
That a lot of people struggle with Bitcoin when it fell out of bed. So that's what happens.
Right. What happens when there's been a major market correction?
People lose interest in it.
Right. So we see it's like the wake after the GFC.
Yeah.
People lost interest in the stock market until we started to have a few moves up in the market, a few nice moves up that were being recorded in the media.
But this is the sort of stuff we talk about with our students and teach them how to understand this, because the most amount of interest in anything is just before a crash.
Yeah.
And the least amount of interest is after it bottoms.
After it bottoms, yeah.
Because everybody's lost a lot of money, and that's what happened with Bitcoin falling that 75%. Because that was like a second crash. It had the crash, which was 7/10 of 2018 or something.
Yeah.
Roughly, and that was like a 90% fall, I think, wasn't it?
Yeah, there was that small one,
and then
but
it took off.
that was just so minute compared to what ended up
And then I had
unfolding
somebody
after the big rise.
on our YouTube channel saying, you know, when I said Bitcoin was going to go to 20,000, and they said it would go to 60,000 before 20, Dale. And if I'm right, you give me a copy of your book. I still haven't had to send a copy of my book because I was right. It went to 20,000 or below. So to me, Bitcoin is so predictable.
Well, we're going to talk about where we think it's going.
I'm not allowed to talk about it yet.
Not yet. It's too early. But right now, I mean, it's just interesting to me that these sort of headlines are coming out right now. But we've got more, haven't we?
But Bitcoin just runs on speculation all the time. That's all
it does.
So what's the next?
All right.
Okay, so
It's you.
well, I was just thinking, is it worth reading between the lines, you know, or even taking a contrarian view, you know, into getting to the next, you know, sort of bull market? Like everybody's, that's what Buffett says: buy and doom, sell and boom. So if it's doomy, buy, and if it's boomy, sell.
That's right. All right, so we've got another one, haven't we? Let's
Well,
have a
I
look.
hope so.
Shall we take a look?
Otherwise, we'd just keep
And
going.
this next one is actually from Forbes, and it says that bloodbath, sudden $1 trillion crypto crash sparks fresh Coinbase warning and tanks the price of Bitcoin, Ethereum, BNB, XRP, Cardano, Dogecoin, Polygon, and Solana. So, I mean, first of all, that Dogecoin was interesting, isn't it?
Well, everybody says Dogecoin.
Dogecoin.
No, I reckon they get it wrong because it's spelt dog e-coin. You know, whereas everybody calls it Dogecoin because I don't think they like calling it a dog e-coin.
Yeah.
But I've never been excited about that one. So
Doge?
Doge. Yeah, whatever. It's still not spelled Doge, is it? Or
I thought you were
Doge.
saying Deutsche, like as in the Deutsche.
Nah. No, but you know that's the thing is that's what
Bloodbath though.
No, I'm not against
Bloodbath.
Yeah, I'm trying to say I'm not against cryptos. I think you need to understand what you're doing. But when you're talking about on a market, this is a pure speculative market. This is not an investing market. It's a speculative one.
Okay, let's just align this with the patterns that unfolded after the GFC or around the time of the GFC. It was a bloodbath when the market corrected in the GFC.
Correct.
And it was a bloodbath when the tech stocks corrected when they were almost at their bottom.
Yep.
And now it's a bloodbath after crypto, and Bitcoin in particular, has come up significantly. It's had a significant rise and then it's had a swift fall back just recently.
Yep.
Now they're saying bloodbath.
Yeah, that doesn't surprise me.
And we're hearing there's lots of other things are being said at the moment as well. So
But you got regulators onto this. You've got big exchanges that have gone belly up. You've got right now Binance is in trouble, and that's the biggest exchange, and it's big. There's a lot of stuff happening there. You've got all the big banks in Australia. One has already banned transferring money through to crypto from their bank accounts. The other three are looking at it at the moment because of all the I was going to say crime, but the what do you call it? The scammers.
yeah, okay.
So there's a lot of scamming happen. So and there's a lot of banks overseas that have already banned it as well. So to me, it's there's a lot more happening, and the governments are taking a lot more attention onto this area at the moment about regulation because none of the exchanges are regulated.
Okay, so what you're saying is that all this doom and gloom will help their plot or ploy to regulate everything.
To make it, to tighten it up, to tidy it up, make it much more solid and much more robust as a system.
Right, so then it will be better for investors.
No. it's still not an investor market. It is very much a speculator's market. It's not, because the end of the day is there are some cryptos out there that are based by product, but Bitcoin has no product. It's supposed to be a means of payment, and that's failed miserably, hasn't it?
So some cryptos you can look at like a stock, is that what you're saying?
Like Ethereum is different than Bitcoin, and so, but there are other ones out there that are more product backed. It's a little bit different, but it's still.
If we take away the fundamentals and the whole theory about whatever they are, and we just purely look at the crypto charts, we have a different opinion based on just looking at a chart.
I can trade crypto. That's not a problem. I'm not saying that. I'm just saying it's speculative. It's not like an investors. Investors shouldn't be in a crypto because they're investors. Investors invest in assets that grow.
Yep.
Okay. And that have solid backing. A lot of cryptos don't have any backing. Like what backs Bitcoin? Nothing.
Yep, that's right.
Nothing. All it is what the price of Bitcoin is somebody paying more for it. That's it. There is no business behind that. There's no backing like you're buying a BHP or you're buying a Telstra or something like that. So it's completely different. So it's a purely speculative market. So if you want to speculate, I don't have a problem with that as long as you understand what you're doing and speculate it, but put it in the right context.
Yeah, but when you talk about investors, right, I'm going to really just debate this one, because you often say to people you can put a little bit into speculative areas, right? But 1 minute you're telling me no, investors don't go into speculative area, and then yes, you can in another conversation. If you have a percentage of your portfolio allocated, you made up your mind that
what's speculative for an investor?
That's what you want to do.
Speculative for investor is...
Well, we've talked about it. We've looked at specky stocks that were...
Yeah, I know that, but that's stock. That's still buying an asset. Not necessarily the case with the crypto. Sometimes you're buying into a company it's completely unregulated.
So if they do their research and they understand the risk and there is something backed behind it, like Ethereum's got something behind it. So if there is something behind it and it ticks those boxes, then you're saying... It's okay, it could fit that category.
For an investor, no.
Okay.
Traders, yeah.
All right. I don't think we're going to get a resolution here. I'm not asking for one, but I just wanted to make it interesting.
You're wanting me to agree with you, and I say for an investor, no. For a trader, yeah.
Great.
For an investor, no.
I know you're trying to protect people. That's your aim,
because
isn't it?
I've seen so many people, decimated by making bad decisions, and people on pensions and people who borrowed money to get into Bitcoin and other cryptos before the first crash, you know, and they just decimated themselves.
They did.
Because they were more investors and they didn't understand. A trader understands volatility, and a trader understands how to get in and get out and to manage it and look at the chart. If you can't look at the chart and understand that and actually analyse it, then don't go anywhere near this place, because Bitcoin is so easy to trade. It's not hard to trade. I've done some research.
But I'm not saying you're saying an investor purely from the point of view they don't understand the chart.
Correct.
But I'm saying that there are educated investors out there who do understand charts, but they just see themselves as trading different time frames. You tell them that.
Okay, well, I just did, didn't I?
Now you've heard our thoughts on these headlines, and there are loads more of them, which we ought to be telling you something about what's going on. So next we're going to share our thoughts on what the charts actually indicate with a look at Bitcoin, and we'll compare Bitcoin's potential growth to a couple of the best ASX stocks.
Okay. Well, so we should. So we're going to bring up Bitcoin. And as I said, I've studied Bitcoin and I've worked it out, and the Bitcoin's great to trade. If you understand what you're doing, if trading Bitcoin doesn't bother me.
Yeah.
You know, but you need to understand the risks that are associated with it, and most people don't.
Fabulous. Now, let's just take a look at Bitcoin. So we've agreed on the same thing, that yes, trading Bitcoin could be a good option for people who know what they're doing. Right?
So you found some middle ground there.
I found some middle ground. Now we've really got to get into where we think Bitcoin could go from here.
Up.
Okay? That's my view, yeah.
If it doesn't go down.
Yeah. So we've seen this really volatile move, and this was last month. So it dipped all the way down, tested that bottom, and then bounced up again. So potentially we've seen... So first of all, we talked about a 75% fall from the top. So often markets will fall, but we did. I think we may have talked, you and I, about the fact that there's always a potential for support around this level. So there's still there's still a slight risk of a further fall, and it could be like a 30-40% fall that could happen, and that's an if, down to that level. So let me see if I can just mark that there with a horizontal line, so we all know, 35-40% or somewhere in the middle there, that's the risk. The upside potential here we're looking at is somewhere in the order of 60, could be around the 50-60,000 point mark. I'm going to put it to the upside.
One thing I'm going to say is I don't think Bitcoin will repeat what it did in the past, though.
Yep.
In that it's not going to be go skyrocketing.
Okay.
It's not going to, because there's going to be a lot more people going to be a lot more careful about it, simply because they got burnt in the meltdown into 2018 and obviously the one into 2022.
Yep.
So I don't think you're going to see that same euphoric buying. It's going to be a lot of people being a lot more cautious. And the thing is the big end of town and other places are being a lot more cautious. Got banks, some of those banks in the US that were going down, more recently. I won't say Silicon Valley Bank because it didn't do it, but there are other big banks in the US that they had big chunks into crypto, and that's caused their downfall. So that could be a even bigger thing happening bubbling around in the background that we don't look at.
That's right.
Or we haven't been looking at.
So look, I'll have to move on here.
Okay.
Now we've got to move on. We'll come back to Bitcoin later on after the break.
I was just getting warmed up on it.
I know. We're now going to look at BHP because BHP is obviously one of our biggest stocks in our market. Now, if the best stocks on the market are going to take off, BHP has to be one of those shares that does that. We've agreed.
I would agree with that.
And if we look at the long-term projection for BHP could be somewhere up around $55-60.
Easily,
A projection. So let's just have a look at where it's trading at now. We want to have a look. There's 55 and there's $60. So there's a potential for a 25
to
35% rise out of BHP. I'm not saying it's going to do it all this year, but this next move up.
You're talking about by the end of this year, or are you talking about the next 12 months?
Yeah, I'm saying next 12 months. Yeah,
okay.
Within the next 12 months, that there's a potential for BHP if it starts to take off again, and we see moves above these highs here, that it could continue up to around that $55-60 mark.
Okay, I like that.
I'm thinking longer term, it could even be more bullish than that, provided it stays
longer term.
Yeah, provided it stays above this low here, we're fine. But if it takes out that low, then we just need to reassess it. So that's BHP. And another big Aussie stock, which we're looking at to see whether it could outperform. At the moment, we're not seeing that because it's still part of this sideways consolidation. We need to see this low hold in March 2023. But this is it's one of those stocks that at times it has great falls, but then it has massive strides. Now, whether this has changed indefinitely because of what's going on with the renewables space, we don't know, but it's still in high demand at the moment and it's being traded, buyers and sellers are still trading this thing. But
it's not delivering.
It's not delivering, no, like the other stocks yet at this stage. So, but it's not falling away either.
That's the thing I love about it. It hasn't been delivering. It's been held back for whatever reason. I think this could be the real dark horse. I think this could take off.
Yep, so we've just got to wait and see. So now, look, this is the weekly chart. So I'm just going to go back to the monthly chart because it's a bit easier to see what's going on here. Okay, so now if I look at where this stock, there's some potentials here. I'm looking up to see whether we could have a move. Oh, look, this stock could go anywhere between, I'd say, around $10 and around $12 or $13.
So 35 to 60%.
But I think in the next 12 months or so, it could take off at around that $10 or $11 mark. Provided that low holds. Now, if that low doesn't hold, we're going to see it come back. We'll have a sizable correction. I think it will come up and test these levels here at around $8 something before it goes either way. So we'll just wait and see what Santos does. But there's some potential in that one. So we've covered off two stocks on already. We've covered off two stocks and we've covered off Bitcoin. So at this stage, if we're looking at Bitcoin and we're saying that this crypto has a potential to go from where it's trading at now to around 33 to 50 odd %, at the moment, BHP is sort of going to go line ball with where that first level is with Bitcoin, probably around the same.
And Santos
and
will
Santos could outperform as well. So I mean, or be around the same level.
And here, all you're talking about is capital gain. And these stocks pay dividends.
They pay dividends as well, right?
Yeah.
That's a good point. So, like, for the argument for the investor is where's your money better off in terms of safer stocks that will pay a dividend, and then these are much easier to trade. They're not as, like, if we just go back and have a look at the Bitcoin chart, the sort of volatility that we see in that. On the downside, it's really swift compared to what you might see.
That's what you've got to be able to take if you're in something like that. It's in that speculation. You have to take that.
Yep, that's right. Look, I mean, personally, if you're asking me, I do like the chart of Bitcoin in the way that it's setting up.
I wasn't asking you.
Well, you are now.
I'm asking. No, I wasn't.
I'm just
so you like
posing
the
it
chart
for
of
you.
Bitcoin. I like the chart of Bitcoin too.
I like the chart of Bitcoin.
But
BHP's not ready yet, though. We need to see a bit of a move up, and same with Santos before we know what they're both doing. So that's the two big stocks that we pitched. We've got more stocks coming up. We've got some smaller ones as well to have a look at and see how they'll go against Bitcoin and
now,
other
don't get me
cryptos.
wrong, I do like Bitcoin and I think it's going to go up. I don't have an issue with that. I just want to make sure people understand that if they're not knowledgeable about trading and looking at and analysing charts, then they shouldn't go anywhere near any sort of cryptocurrency, regardless of Bitcoin or whatever else.
Yep.
So they just don't buy and think, oh, it's going to be okay. It's not going to be okay because crypto will crash again.
Yeah.
And it just
You're
runs,
safe.
on emotions. That's how it runs. And so it'll go boom and it'll go bust again. But Janine, it's now time for us to take a short break, after which we're going to get into some more stocks and when to trade them. For those watching here on YouTube, thanks for joining us. And remember, you can participate in our show each and every week by emailing your questions to info@wealthwithin.com.au. And remember to title it Wealth Within Live and tell us you're watching on YouTube so we can put your questions at the very start of this recording. Also remember to comment below comment below this video now on YouTube, and then email us an image of your post, because we'll send you a private link in the first week of July to my analysis of the top 20 stocks in our market and what I believe they're going to be doing in the coming year.
That's so exciting. And also remember to head over to talkingwealth.com and sign up for your free 7-day trial so you gain access to all of the content in tonight's show in full. And also get Dale's weekly stock market update with predictions, hints, tips and other things. This is all on talkingwealth.com. For our talkingwealth.com subscribers, just relax and stay tuned, as we'll be right back after this short break.
Now, the great Australian dream of owning your own home is becoming increasingly challenging for many Australians. Now, indeed, housing and housing costs have continued to skyrocket over the years, with many now asking how we can fix the problem. Social housing has dropped from 4.9% of all housing in 1981 to 3.8% in 2021. Now, if we compare this to other countries, Australia sits in 20th position. Looking at the statistics, it's easy to figure out a solution. Governments need to provide low-cost housing, and instead of decreasing this, as has been the case for quite some time, if they increase public housing, it would achieve several things. It's about time we stop feeding developers huge profits and help those seeking housing to be able to realise that great Australian dream. So what is going to happen on our marketplace? And it's a frustrating time when you see this sort of thing happen, where the market's not really going anywhere, and it will pick a direction soon. But I'm not worried about a recession. The market always does well coming out of recessions, and it's a perfect time for you to set yourself up. And I know a lot of people, they shy away when they hear those sorts of doom and gloomy words like recession, cost of living being up, interest rates rising. This is not the time to shy away from investing. This is the time to get into investing and to learn